Morning, afternoon, and evening, depending on when you're watching this. This is a presentation done for the FSB on making tax digital for income tax for self-employed people. So I'm going to open with a short story about one of our clients. Now, I've called her Sarah, and that's obviously not her real name, but she embarked on one of our accountability courses where we're being proactive with this sole trader. We talked through her businesses, her challenges, and potential solutions to those challenges. And one of those things that she mentioned was that she struggles to charge all the clients the same amount. So we did a bit of analysis on this and promoted charging her full charge out rate per hour to all clients. The result of this was that she generated an extra £12,000 of revenue a year. That's something like a 30% uplift in her revenue. And that revenue comes with no costs and no expenses. So it's £12,000 directly to her. And this is one of the massive benefits, I believe, of making tax digital for income tax, is the proactive nature that we accountants and you, the business owners, can take on your business going forwards. We'll talk about that a bit further. But ultimately, why should you stay listening? Well, I'm James Bennett. I'm a chartered management accountant, founder of J-Benn Finance, a full-service accounting practice based in Witham in Essex, covering Essex as a whole. I'm an accountability coach, as you heard about with Sarah, and I'm an aspiring business speaker. You can judge whether I'm any good. So that's me. But what is NTD for income tax? Well, effectively, HMRC is on a journey, like many businesses around the world, of digitalisation. They're behind as usual, but that's not unusual for the government agency. But effectively, they want to digitise your tax records. So currently, you can collect all your paperwork up and then go and file your return through HMRC. But effectively, what they want to do is they want to make sure that these are filed digitally by one of those software providers out there. There's a lot more than that, but that's just a summary. What that means is they want you to keep digital records and then you to file digitally. So the way, if you were filing on HMRC's website, that will disappear as of 26, 27 for you if you're in that thing. At the same time, they're also changing how you report. So instead of doing one submission by the end of Jan following the April year end, you're now going to move to quarterly reporting and a final submission. So going from one submission to 5 effectively as a minimum. And you can see those periods there. So 6th of April to the 5th of July, you're going to have to report in deadline by the 7th of August. 7th of November, 7th of Feb, 7th of May, and then a final one by the 31st of Jan. So not only have you now got to keep digital records, you've now got to do 5 returns instead of one. Although they're slightly less onerous, but they're more deadlines and more effort. So who cares? Why should you care? And I think it's very important to stress that making tax digital for income tax targets self-employed people and landlords. Okay, and in the first wave, it's anybody earning over £50,000 of revenue from either one or the combined of those two. So I've got some examples to try and make it a bit clearer. So first, we've got Sarah. She's back. She earned £55,000 in the 24-25 tax year. And because she earned over 50 grand, she will have had a letter from HMRC, and come 26-27, she will be part of making tax digital, and with no option other than to find some software, keep digital records, and file those quarterly returns and that final submission. Pretty straightforward on that one. Then we've got David. So David earned £30,000 from his self-employed income, but he also rents out a property for £25,000 a year. So his total income is 55 as well, and he will be part of making tax digital for 26-27 when that rolls round. So both Sarah and David are in for the 26-27 tax year. Then we've got Bob. So Bob just generates 32,000 from his rental properties. So he's under that 50,000, but in the 27-28 tax year, that threshold of 50,000 is reduced into 30,000. So Bob will join MTD in 27-28 and have to, for all that rental property, have to do those 5 submissions and a final submission as well. Finally, on the end, we've got Jane. So Jane only earns 18,000 from her self-employment. So she's not in what we're calling wave 1, 26-27, or wave 2, 27-28, but we expect her to join in 28-29. Now, it's a bit woolly on there because the commitment from the government is that by the end of Parliament, everyone who is self-employed or a landlord will be in making tax digital. Because at the end of the day, HMRC are not going to run 2 separate processes for self-assessments. So we think that's probably going to be a catch-all in 28, 29 if the process goes as they're expected. So what does that mean for you, the self-employed or the landlord? So for the 25-26 tax year that we're in now, you will effectively have no thresholds and it's as before. So you're coming around to the end of the 25 tax year, you will have to submit by January 2027 your return. Okay, one return for the whole of the 25-26 tax year. But as of April 26th, and if you're in that above that threshold of 50,000, you will have to start doing quarterly returns. And then in 27-28, as we saw, over 30,000, you're within quarterly returns as well. So it's quite hard to see there, but what this will create is, and it's very difficult to put on a slide, but hopefully this kind of shows it. If you're in the 25-26 tax year next year, you'll have to do one submission on the 31st of Jan by 2027. But if you're in the first wave of MTD, you will have to do a submission for your 26-27 tax year on the 7th of August and the 7th of November before you've done the tax return for the 25-26 tax year. So you're going to have an element of overlap there and confusion around what potential confusion, around what's in which tax year and what tax year you're completing and stuff like that. And then after you've done your 25-26 return, filed on the 31st of Jan 2027, you've then got 7th of Feb, 7th of May, and then a year later, you've got your final submission, which is that green box there. So you can see this is challenging for individuals, but it's also going to be challenging for accountants. If many people who have filed their return on their own suddenly decide they want accountants to do it, there's going to be a significant uptick in workflow, not just around that 25-26 one, but that 26-27 is going to suddenly create quite a bit of extra workload for us accountants as well. So some challenges on both sides for us there. So the news and the headlines haven't been massive about it. HMRC are doing some advertisements around it. And if you look at a lot of people will comment on the challenges that this brings. And I think they're pretty obvious as you go down. You've now got to use software. So there's a cost of software. Obviously, you've got more deadlines. You had one, you've now got 5. And you've got a learning curve around how do we file. Now it's for a different piece of software. It's not HMRC's website. What do I have to include in those quarterly submissions? What do I have to include in the final submissions? So there's quite a lot of challenges ahead, and people focus on that. And that's just natural because most people don't really like change. But I think there are opportunities for making tax digital for income tax. I really do. I think there's an opportunity for better tax planning. So in most instances, we get past the end of March as accountants, and then we're given a lot of paperwork. And some of that stuff, once we look at it, we could have planned better and managed the tax burden for the individual better if we'd known roughly where they were pre their year end in March. And obviously using software and doing quarterly submissions will give us an idea of where the individual is going to end up with their individual tax burden. So I think this is a really good effort that we can be proactive here opposed to reactive. The other benefit is definitely improved financial insight. So many of the softwares we've looked at and tested and understand what's on offer, as you do these quarterly submissions and you've connected your bank account and things like that, you can see what your estimated tax burden is. So at least, instead of, again, filing in March, waiting 3 to 4, 6 months for your accountant to come back and say, here's your tax burden, you'll have a good idea of what that tax burden looks like, and in hope that many people can put away and save that tax burden when they're seeing it, so that they can feel more comfortable that they're not surprised in Jan when they've got a big tax bill. Now, I put reduced admin there, and it's probably a controversial one in some ways, because I think where we run our limited company, and I run my limited company, the accounting practice, and the limited companies we look after, when we're on top of the bookkeeping and collecting all the receipts and everything in, there's definitely less admin overall. It may not feel like that if you're self-employed, but certainly collecting all the receipts up, how many receipts are you missing because they've gone down the side of the truck, or they're in the back seat of a thing, or they've been thrown away? And that's an expense that you've missed, and you're not going to get back, and you're actually paying extra tax because of that. So I think by being on top of it, you might feel like you're doing more admin, but actually it's reduced, because actually you're you're doing it more regularly, less time, more regularly. And that leads to the fourth thing of less chance of errors. And again, I genuinely believe if you work with an accountant and they're doing your bookkeeping, they will your there will be less chance of errors. There will be less chance of you paying more tax than you need to. And that's certainly what we see when we have clients come to us. We review their old tax things and we ask them why they didn't put this in, why they didn't put that in. And that's because they just didn't know. And that ultimately has cost them money and paid more tax. HMRC do not check your tax return for the validity of claiming as much tax back or cost back as possible. They will look at what income you've got and challenge if you haven't paid enough, but it's very unlikely they're going to knock on your door and tell you, as a self-employed person, that you haven't claimed all the tax you could have, claimed all the expenses back and reduced your tax bill as much as they could. So I think there are definitely opportunities out there with making tax digital for income tax over the challenges. But it's down to you to decide. Ultimately, if you earn over 50,000 in this tax year, you're not going to have a choice. You have to use software, you have to file quarterlies, and you should probably consider whether staying as a sole trader or moving to a limited company is a better option. And certainly that's something we can help with that discussion there. Now, last slide was questions, because this was going to be a live networking event. Obviously, if you do have any questions, please get in touch with us. You can find us at www.jbenn.co.uk or email address is admin@jbenn.co.uk. Find me on LinkedIn or on our website there. You can get our numbers and email addresses and things like that. More than happy to enter in any discussions, check your position for tax and whether you are in making tax digital for income tax or not for next year if you're unsure. I want to thank you for your time. Glad you got to the end of my 12 minutes and look forward to presenting again in the future. Thank you.